Welcome back. So, in the previous video, I showed you how price move, um, how the price algorithm move to take out old highs and old lows, or to balance an imbalance, that is to fill an imbalance, right? So now I'm going to continue on that concept and then move further on it. Um, like I showed you in the previous video, price move to rebalance an imbalance or to take out old lows or old high. And I'm showing an example of imbalance that was balanced by price. You have an imbalance here. You have one, two, three candles. There is a gap in between them. You can see it's right there. So clean and smooth. Price will trace back, touch the low of that imbalance right there twice. You can see, and then it's then went lower. So basically, price went to rebalance that imbalance and then continue it is movement downward. That is a pure and clean price algorithm movement. So if you look at your chart, if you check it, you're going to see this happening over and over again. Let me show you an example is this. We have one, two, three candles, three candles. In between this first candle and the last candle of the three, there's a space in between them. Did not touch each other. Clean imbalance, right? Got what happened next? Price came back to rebalance it right there. You can see right there multiple times. It touch it and they close above it, close right back inside of it right there. You can see price respects this imbalance here and the reverse went higher. This is how this price. Let me show you on quite clean on the lower time frame chart. That imbalance is there. You can see this candle. See, one, two, three, three candles that the first candle and the last candle of the three did not touch each other. You can see there's a space in between, there's a gap, and then price came back to refill it right there. Let me show you an example again. We have one, two, three. Three candles. We have a large imbalance candle, this one. Price then retrace back to refill it up. You can see it fill everything, all the imbalance, and they continue going higher. And here too, you can see a high, higher high. You can see one, two, three. Three candles. There's a large imbalance in between them. Price drop twice that imbalance level. One, two, and they continue going higher. Here again, we have one, two, three. Three candles. You have a space here, clean. Price drop twice. One, two, to feed that imbalance, and they continue going higher. That is how price move. So price either move to take out an older old load or price move to fill an imbalance. That is the main reason price move. Let me type that for you to see why price move. So fill an imbalance or to take out old high or old low. Those are the two reasons why price move on your chart. Nothing else, nothing more. So price move to fill an imbalance or to take out an old high or old low. It's as simple as that. Okay. Now, having said that, you also have to understand that price don't just move at that alone. There are time price move best to carry out these operations. Hence, it's called time. Now, our world is programmed based on time. All human endeavors have time attached to them. Even our daily activities and human activities, major life events, they are measured and processed based on time. There's a time for a child to be born, to grow, develop, go to school, graduate, work, right? Becomes a professional in something, and also dates, gets married, and have kids. Then becomes a grandparent, and then from there, you know. So the human world is ruled and controlled based on time, is measured based on time and distance. That is, they measure your achievement based on the time it costs you to achieve that thing or the time you use to achieve it. So it's always about distance and time, progress and time. The time you made that progress, at what age, at what time, at what level do you make that progress, and how long does that progress cost you in respect to time? So the human world is a time-based world. And same thing apply to this market as well. Everything you see in this market is based on time, 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 time. It's always in respect to time. Now, when you look at your chart now, to my right side, you see what you see is called price, the price of the assets, that is the distance the price is covering. Now, what you see below here is time that it took that asset to cover those distance. Now you have December, then next year is you can see January next year, then February next year, and so on. If you go to lower time frame chart, you're going to see something like days of the week. Then lower again, you're going to see hours of the week, hours of the day. And if you go lower again, you're going to see something like minutes of the hours of the hour. So like that, it's always about time and price. Below here, you have time, and right to your right side, you have time. You have price rather. So at the vertical level, you have price, and this bottom level, you have what we call time. So there are time that price move best. Now, when we get to intraday or weekly trading, we're going to cover more on that. But for now, stay with the concept that price move within a time horizon, within a period of time. So it is always time and price. Do not forget this. Let it stay in your mind. Let it stay in your understanding. It's very important. It is always time and price. So, having said that, now let's move to the concept of time frame. Now, in your trading view, at the top here, it'll be something like 5M, 15M, 1H, 4H, DWM. Now, this W stand for 1 month. This M stand for 1 month. This W stand for 1 week. It is short form of weekly, monthly time frame. M short for month, W short for week, right? And the D short for day, for the day. And the H short for hours. So if you see 4H, it means 4 hours. If you see 1H, it means 1 hour. If you see 15M, it means 15 minutes. 5M means 5 minutes. 30M means 30 minutes. So if you click on this arrow, top down arrow, everything is well listed there in full. 1 hour, 2 hours, 3 hours, 4 hours. Now, if you click on, let's say, 1 day, it means that each of these candles you see on your chart, it takes 24 hours for market to print that a single candle. If you click on 1 week, it means that each of these candle takes a whole week to be fully completed and printed out on your chart. So this one single candle now is a summary of all the price action that happen in a single week on your chart for a week and like that. Now, how do we use this information? It's quite simple. We focus more on higher time frame, which is basically what we where the smart money guys focus on as well. That is, focus more on months, weekly, and daily. These three time frames are the real deal. They tell us what the smart money guys are doing with price. They tell us where they are pushing price to and where they are taking profits or selling. So if you want to know where price is going to for the long time, for the next coming months, you have to come to weekly or monthly time frame and see. Okay, you have to come to weekly or monthly time frame and see that. And how do you see that? By looking at which low was taken out and which imbalance was filled or is about to be filled. Let me show an example of that. When price broke this high right here and closed above it this particular week, that was when price shifted from being bearish to bullishness. And ever since then, it kept going higher, higher, right? Good. That is one. Let me show you an example again. When price broke this low and closed below it right there this week, that was when price shifted from bullishness to bearishness. And ever since then, we have been on selling this market. That was since August 28th of this year. Look at that date. Since then, price has be going bearish. Now we have a few weeks of retracement right there, and right now it's about to continue going lower. Take out these lows, this low, and they come down to this imbalance. right there. So this imbalance will be filled by price very soon. So just by looking at the weekly level, which high or low has been taken out and which imbalance has been filled or will be filled next, you can be able to tell where they are pushing price to. Let me show you another example of it. You have a price was actually range, right? And then we have this low, you can see broken and closed below right there this week. Ever since then, price turned bearish. Of course, it retraced a little bit, they continue going lower. Took out the previous low here, retrace again, continue going lower as well. Took out this low as well, and it's retraced to fill this imbalance here, right there, and then continue going lower, retrace as well, retrace a little bit, then going lower, lower, and like that. So once you see price take out an old high and close above it on the weekly level, then that is a bullish sign that they're about to take price higher. Same thing if you take out a low, like what happened here, it took out this low, now price turned bearish. And now we're not bearish now on these assets, this currency pair. So it is as simple as that. Now, if I want to trade for this coming week now, whether I have a week close today, based on the information I've passed across, right now we have just a retracement, and the price retraced to where? To this bullish order block. Now, I will go detailed into this later. When price is retracing, when do you know that it has stopped retracing and it's about to continue going in the right direction? Now, this will take me to the next topic in this series, in this course. So, I will explain this to you further in the next video by showing you what price is looking for during its retracement period or during its movement, and where it should be expecting price to reverse or continue going higher or lower. So thank you. See you in next video.